Hello and welcome to This Week in Markets. Dalal Street's 4-week winning streak finally came to an end this week. But it wasn't just because investors suddenly turned bearish. Instead, markets went through three distinct phases over the last 5 trading sessions. A sharp geopolitical sell-off, a quick recovery, and finally an earnings-led rebound. Benchmark indices BSE Sensex and Nifty 50 ended the week down around 0.3%. The weekly decline, however, doesn't fully capture the volatility investors witnessed during the week. So what exactly happened? The biggest trigger came on Wednesday. Fresh escalation in the conflict involving US and Iran pushed Brent crude close to $79 a barrel, reviving concerns over inflation, India's oil import bill, and global risk sentiment. The uncertainty triggered the biggest one-day fall on Dalal Street in more than 2 months, wiping out over 8 lakh crore rupees in investor wealth. India VIX, the market's fear god, surged more than 26% on Wednesday, its sharpest single-day jump in months. But as concerns over an immediate disruption in oil supplies eased, volatility cooled off just as quickly. The India VIX fell nearly 9% on Thursday, another 7.7% on Friday, indicating that investors were gradually becoming comfortable taking fresh positions. The second big trigger came from the earnings season. TCS kicked off the June quarter results with a mixed set of numbers. While profit declined sequentially, the company reported a $9.5 billion deal pipeline and said its annualized AI revenue had reached $2.6 billion. More importantly, management commentary on enterprise technology remained constructive. That was enough to lift sentiment across the IT pack. TCS gained nearly 4% on Friday, helping the Nifty IT index emerge as one of the week's best performing sectors and allowing benchmark indices to recover a big chunk of Wednesday's losses. Interestingly, the broader market continued to outperform. The Nifty Midcap 100 gained around 1.3% during the week and touched a fresh record high, while the Nifty Small Cap 100 also ended higher. That suggests investors continue to show confidence in domestic growth themes despite volatility in large cap stocks. Sectorally, realty emerged as the week's biggest gainer, followed by IT, consumer durables and metals, while FMCG and auto were among the laggards. Institutional flows remained supportive throughout the week. Interestingly, foreign institutional investors turned net sellers this week, pumping in nearly 4,670 crore rupees in Indian equities, while DIAs added over 8,000 crore rupees. So what should investors watch next week? The spotlight now shifts firmly to the earnings season with results from HCL Technologies, Tech Mahindra, Wipro, HDFC Bank, ICICI Bank, Axis Bank and Jio Financial Services expected over the coming days. Investors will also track India's retail inflation data, movements in crude oil prices and developments in West Asia for further direction. The biggest takeaway from this week is that despite heightened geopolitical uncertainty and a spike in volatility, buying interest returned quickly. As earnings season gathers pace, corporate commentary is likely to become a much bigger driver of markets than geopolitical headlines. That's all for this week in markets. Thanks for watching. I'll see you next week. Until then, stay tuned to Fortune India for all the big news and exclusive updates from the business world.